My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends? I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. My week for pals is finally over. The week where we get results from an insane number of big companies, including companies like Alphabet, Amazon, Apple, Meta, Microsoft. So many companies that it's almost impossible to remember what's driving these moves. It has finally concluded. As the Dow gains 289 points, S&P advances 0.41%, and the Nasdaq jumps 0.80%. We ponder, how good was Amazon last night? I forget. I mean, it was good, right? Pretty fabulous. How weak was Apple? I don't know. I mean, maybe better than feared. In the end, the tech titan action this week was more about who could tell the best story, which surprisingly was Alphabet, and the parent of Google, and who had the biggest blowout, which was Amazon, which had a poor number last time. You know what? It's a travesty that all these companies report during the same week. No one could possibly study all of them and make good decisions in such a short period of time. And I say that as someone with a travel trust that owns every single one of those stocks. There's a reason why we have a whole team. Otherwise, I would have gone nuts years ago, as opposed to just this week. Now, I remain steadfast that every one of these names, including Apple, is good enough to own. Apple's the only one that's too expensive if they can't exceed the projections for the current quarter. But the adjustment for Apple's disappointing outlook has now been made. I bet the stock settles between 210 and 220 next week, and I will be pounding the table. The others can be bought at these levels now that they've all come down, except from the highs, except for maybe Amazon. I mean, Amazon was at 161 when I pounded the table last time. It's going up all the way to 197. Wasn't it easier to buy in the 160s? No, because people thought it was going to the 140s. Now, with that out of the way, let's go to the game plan. We have still one more bombardment of earnings, but I want to start the game plan in the middle of the week. Oh, look at this. It's on Thursday. That's an odd thing. Arguably more important than the stock market is the Federal Open Market. I mean, for the stock market, than the election is the Federal Open Market Committee meeting. And why is this? Well, this is so important because bonds keep going the wrong way. For instance, today we got this incredibly weak non-farm payroll report. It was distorted by hurricanes and labor strikes. But at first, the bond market reacted positively. Interest rates came down. I thought that was going to be terrific. But then bond sellers came back with a vengeance, and long rates screamed higher, reaching their highest level since early July. In my opinion, the Fed needs to cut rates again. In the last couple of weeks, we've heard from too many businesses that have made it clear that we have a real slowdown on our hands. The economy's a little shaky. The bond market didn't like it when the Fed started cutting rates in September, though, despite a relatively strong economy and a healthy labor market. So you could easily argue that if the Fed cuts again, maybe we see a similar negative reaction. But honestly, you know what? I don't even care. At this point, my view, if the Fed cuts rates next week, psychologically, there's some hope that we could see a pickup, particularly in housing and autos, two industries that seem to be losing strength by the day. It is vital for the Fed to recognize that it needs to cut. Then again, before the Fed meeting, we have Election Day, and both candidates seem to be eager to bust the budget. The only question is whether they can get their agendas through Congress. Very difficult. And yes, Trump would be more of a budget buster than Harris because big tax cuts translate into a bigger budget deficit.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.